Hi, and welcome to Magic Scanner website, a fundamental stock selector for KLSE and SGX financial market. You're about to learn the secrets to raking in double to triple digit return per annum in trading or investing, no matter how much time you've had to prepare. It doesn't matter if you've never had any past experience or education, this Magic Scanner will tell you everything you need to know without spending too much brain power. This is unlike any tool you'll find out there. It's the edge that most analysts and fund managers want or have. Go ahead and get yours now.
Hello, everybody. Welcome to another Friday chart clinic for the 19th of July 2013. Last week, the 12th of July, I was away for a short business trip. And as such, that we did not do both Friday chart clinic and the closing bell. So this week, we are back again for our very brief, like a radio station that we put up in our website. Tell your friends about us. And if you like what you see, sign up as a like member. Okay, so on this agenda for today, on the 19th of July, I will talk about the agenda, what you guys are expecting on the 27th. Okay, Maybank. Okay, want me to look at Maybank? Just put it here. Right. For the July 27th market outlook, just want to talk about the agenda. Then I just want to give you a sneak preview of our new website called the Value Investing Online Course. Okay, that's a new website in here that we plan to showcase as one of our new product offering. Okay, SAAG Carlsbad. Okay, Carlsbad, GAB. Okay, and then Kaladi. I don't know whether we have time to do so many. Okay, but we'll try. Okay. Okay, we'll try. Okay, and then we'll go on to the stocks. Okay, without further ado, I'll pass you to Bill about a certain market update and comment on particular stocks that we are looking at, and passing on to you, Bill. All right, here you go, Bill.
Okay, thanks, Martin. Okay, this morning I'm going to talk about Thai beverage because Martin and I we bought this for a number of our clients for a number of reasons, and in the last few days it hasn't performed very well. In fact, it's dropped. So some of you are very concerned about it. So I'm going to go over some of the things, the reasons we bought it, and the reasons we should continue to hold, and what to do if it goes wrong. Okay, so Thai Beverage was listed in 2006 as an IPO on the SGX, and unlike most IPOs, it steadily rose over the next few months. So this is a very positive point, because normally most IPOs are not for the benefit of the buyers, they're for the benefit of the sellers. But in this case, they definitely benefited the buyers. The owner of Thai Beverage is an ethnic Teochew Chinese. He is his name is Charon. I can't pronounce the family name. It's like 25 letters, but I can see the first name, Charon. That's all I know. Okay, now he's a very thrifty, very prudent man. He's the kind of Chinese tycoon. Okay, he's the type of tycoon similar to Lim Gotong, people like that. The guy who runs the Wilmar. They are super hardworking, thrifty. They save money. Now he left school at the age of 9 to work, and he left school to sell toys on the street. He left school to sell toys. I hope you can hear me. If you can't hear me, please let me know. Okay, so he sold toys to get some cash flow, and then he had the idea to supply to distilleries that produced the local Thai whiskey. And so he made a lot of contacts, made a lot of friends, and he worked on a very thin margin. And so he continued to roll over his profits to get more stock, and that way his profits kept increasing. And so by the mid 80s, he decided to start his own distillery, and he got a license from the government, and he did very well. He came out with a beer called Chang beer, which is the Two Elephants beer, and it was more potent than the main brand Singha and cheaper, and he marketed it very aggressively. In 5 years, the Chang beer had 60% of local market share. So these are some of the things about the background. And when we invest, I always recommend know the people that are managing your money. I'm not managing your money. The CEOs and the company is managing it. So we have to be very careful who we invest with. Know the ownership, know the managers. And what you can always do, as I tell people, just Google Cherion, the owner of the company, the chairman, and see what he's done. It cannot be hidden. And over the years, he had only one lawsuit, and that was with Carlsberg. Carlsberg tried to push him out and take over his brewery, and that would have put him out of business. But he won the case. He won a $125 million settlement with Carlsberg, and Carlsberg was forced to get out. So that shows how smart and canny he is. And he never gave up. And that's what we all should do when we have a business. Never give up. Keep increasing the cash flow. Save your money. The other thing that happened that did hurt him, that was the 1997 collapse. Um, and however, on the weekly chart, which I have, it went down not more than about 15% during the 2009 collapse. But because he had so much cash, he was able to withstand the volatility and he came back stronger than ever. And remember, the whiskey business, the alcohol business is cash rich, high cash, very strong cash flow. And also, alcohol is a recession proof business. Now, I'm not saying there's going to be a recession, but if there is, it does protect what we have, and it's not won't go down so much. So that's one very positive thing. Now I also have here a list of beverage companies from CIMB. This was not a recommendation on Thai beverage. It was for Guinness, Anchor, and Carlsberg. So this is good because when a major broker like CIMB recommends something in a big splash, lots of hype, lots of big headlines, I am very much on guard and I'm very suspicious. But Thai beverage was only mentioned in one small line at the bottom of the report. And when I read it, they are much cheaper than Carlsberg and Guinness. Their PE is much lower, and their dividend now is 2.9%. So it has room for growth. Whereas Guinness, a great company, and Carlsberg, great companies, this one has a chance to I would say, grow even more. Now, looking at the balance sheet, that's a very important issue. And some of you were saying, my God, they have so much debt. Well, I don't dispute that. Now, the thing is, what they're doing, they're going to have a capital repayment, F&N, of which they own a very large share. I have the numbers someplace, but 1.3 billion. Now, that money will be used to pay down the debt. So, in that way, because the guy Charon does not like debt. He said in the interview he did with Forbes magazine, he says, I like to run my business by generating from the organic growth, internal cash flow. I don't like borrowing money. And that's what saved him in 1997. So, having said that, I don't think he is so stupid as to do a leveraged buyout and borrow lots of money on hype and so on and ramp up the company, and then the shareholder gets screwed. Now, there's another aside about him that I read was very interesting. He has expanded his empire in beverage companies, can companies that make the cans for the beer. He does drinks, soft drinks. He does so. In other words, and when he takes over a company, he has the same philosophy as Warren Buffett. He doesn't change the name on the building. He doesn't fire all the staff and bring in his own people. He works with the current management and synergizes with them, and that way he benefits the shareholders and he creates a lot of goodwill. So he is very highly regarded in Thailand. Obviously, politically very well connected, and this way, I would say over time, you are definitely going to see um, this company should grow. I don't think people will stop drinking whiskey and beer. And one analyst, I think UOB Bank, was recommending to sell because they said Thailand is removing the subsidy of rice. So that means people will have less disposable income and they'll buy less beer and whiskey. Well, I dispute that. In hard times, people drink more, they don't drink less. So this is going to add to their bottom line. The balance sheet is super strong. You see gradually rising dividends. They have a 3-year dividend growth of 7.39%. They have The yield is around 3% now. So they have a history of steadily sharing the wealth of the company with the shareholders. Mr. Cherone believes in rewarding his shareholders, unlike most companies that don't pay dividends. So he believes in that because that is money you can take to the bank while you're waiting for the thing to rise up. The ROE, return on equity, is quite strong. Um, it's at, my God, I just saw this. Recurring return on equity is 38%. No, I'm sorry, it's not. Um, 83%. That seems like a huge amount. I'll have to check that one, but this is the number I have from the balance sheet that we printed out from Bloomberg. I have to check that. It seems a bit high. Um, the other thing is the earnings before interest, tax, and dividends and amortization. According to Warren Buffett, you don't want to see debts more than that. The EBIBTs, whatever dividend. You don't want to see the that thing lower than what the debts are because you're looking at the cash flow. Well, when the uncertainty is removed on this capital repayment for F&N, I would say based on our projections, this thing will come down to that level, so it's not overly indebted. And just knowing the character of the person running this show, he's not a high leverage buyout kind of fellow, a con man trying to rape the shareholders. He believes in steady growth, steady business. That's how he has gotten rich, and that's how you can become rich in any business that you might do. Isn't that wonderful? I'm so happy to read this from the Forbes magazine. I got this from Forbes. I checked on the internet to find out about him, and came up with this. But in any case, technically the weekly chart is still up. We have come down from 70 down to about 55, so that's a big drop. However, the market is oversold at the moment, stabilizing and building a support. So that's it. And if you have any question, please email that in or put it back over the web. Okay, Martin?
Thanks a lot, Bill. That's great. That's a good prognosis, and typically this is how we actually analyze at the company rather than just looking at the quantitative. We also look at the qualitative. The quantitative is good. The numbers have to be in there, but we also want to see the first generation business owned runner, and this is what we are comfortable. Just like our next coming talk that we are doing. I'll just show you the agenda. Next Saturday. That's right. For those of you who has registered, thank you for your support. Next time, we still have a couple of seats left for next Saturday, July 27 Market Outlook. We also have another company profile, which is the ECS, another first generation like the Thai beverage, but not as big as Thai beverage. And their local company run called ECS ICT. I have spoken to the CEO of the company, and he's willing and to share with us how he brought his company. He's been with the company for over 30 years. And this is where you get a chance to meet him. He'll be speaking at the 11:20 slot on 27 July 2013 at the UEM convention. Okay, so make sure you're there and give. He also told me he's going to be profiling his company and why he thinks his company is a value stock. And this is, we've been investing this stock for almost 1.5 years and 2 years, and we actually gain a lot. It pays about a 4 to 5% dividend yield. And if you have any question, come this Saturday in here and meet Mr. Fu Sen Chin. Okay, so that's what we have planned for July 27, 2013. We have the first speaker is Mr. Benny Lee. He, as usual, is highly profile on the BFM radio station every morning. I think on Tuesday, talks about his outlook. Very spot on guy. He's the chief market strategist for Jupiter Security, a fellow colleague of mine and a good friend of ours too. So he's going to be talking about trading opportunity on the second half of 2013. Then we have a coffee break. Then of course Mr. Fu will come out, and then we have 12 o'clock for 40 minutes. We have Bill will be talking a very special stock market presentation. He's a fund manager representative from Phillip Capital, and that's going to take us to lunch. We probably have lunch over there. We have prepared a simple lunch for all our Muslim friends and participants. So that's where you can do your prayers if you want to. And then at 1:45 onwards, that's where I'll be coming up to give you probably an sort of a market outlook and a forecast for second year 2013 and what we think the year end market is going to be like. Okay. So the title is going to Can Malaysia Beat the Odds in 2013? So do come and listen to what I have to present. And then 2:45 for a short 15-minute. We have open dialogue with Bill and myself for any questions, probably some rather comments of matters that we did not touch on in our presentation. Just want to have an open dialogue. And we find that this kind of conference presentation that we done one in April and subsequently a second year half day, probably another one beginning of next year 2014, just to get all of you, especially those of you who is outstation, should make a trip down and also meet us. It's a 10. We start at 10 o'clock in the morning, so registration about 9:30, and we go on to 3 o'clock, so you can still have time to catch your flight and return back to where you are. So okay, that's we still have tickets left for small fee. You get to attend this. I know we do our Friday regular chart cleaning, but also at the same time, we would like to come and see you guys too. Okay. The next thing I have on my Friday chart clinic today is the Value Investing Online Course Sneak Preview. I just want to show you a website that we are working on. That's a picture of me. We will be launching our Value Investing Online course very, very soon. This is a website. It's at valueinvesting.my. Okay, valueinvesting.my. So I'd like to hear your feedback. How we can get this course as a new product from us to really you guys out there how you can improve and learn how to select undervalued stock with a long-term perspective. All right, to the VSA traders, those are shorter terms, but some of you who want to think about the long term, like how we manage our client portfolio, definitely you want to take a look at this online course that we'll be doing. Okay, that's all I wanted to say, just to talk a bit about. Okay, and next thing I'll be looking at is the stocks for analysis. Okay, SS4A. Now the first one you're going to look at is this, which is sent in from our participant. Let me just bring it in up here, up to you to speed. Okay, let me just bring it up. Okay, here. Okay. Now you can see these two stocks are both REIT stocks. Okay, the first one on the left, it's a Pavilion REITs, which actually broken down the 200 moving edge. Now this thing moved in tandem with the interest rate expectation that it will rise. Now remember, a lot of these rates are actually moving to in tandem to the spread between the 10-year MGS yield and the returns of the dividend yield. So that's what we are seeing, that interest rate is currently at the very low, but the market expectation that's going to be high. So that's what the cost of financing some of these borrowings, it's going to be more expensive. Bottom line, what is simply saying that there is likely going forward, those companies that are dealing in REITs or mortgage real estates trust will probably have a pressure, margin squeeze, and profit margin, and probably margin alert that they won't be doing so well. That is why we see stocks like Pavilion REITs are